Markets in corrective mode as Spanish yields continue to rise. China surprises with export-led March trade surplus. Earnings season kicks off today after the close with Alcoa. I'm Brittany Umar, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar with theStreet, and together we bring you the morning call. So, Scott, we are in a correction. We see the Dow close below the 50-day moving average for the first time since December 20th yesterday, but the correction doesn't seem to be too ferocious. Do you attribute that to the strength of the leaders in the market?
I think at this point we've seen weaker stocks start to break down. We've seen weaker sectors start to get followed through to the downside, but the strong sectors are kind of holding on by a thread. The Qs still look good. Retail is still somewhat strong. High beta tech, the names that we usually trade every day, they actually are really not getting tarnished at all during this down move. So until that changes, I think we're going to get downside action, but the speed's just not going to be so fast to the downside. So I think some shorts are actually a little frustrated because they thought yesterday would be a lot more powerful to the downside instead of, just a 1% down day. But all in all, we're in a corrective type tape, and you have to approach it the right way.
Some say consolidation is long overdue, so I guess the question really is, how low are we going to go, and would investors be wise to buy the dip now?
I think at this point, a macro investor doesn't have to buy the dip now. I think there are some lower levels to come, but we could bounce along the way. So if we take a look at the chart of the S&P, there are a lot of people making guesses how low we can go, maybe 1,100 on the S&P, 1,200. You know what? I'm going to look at my trend lines here, and I'm going to measure it along the way. Here's the macro trend that's been intact since October 4th. It comes all the way up, if I were to keep drawing it, almost to the 1330 to 1340 area. Right now, all we've done so far is we broke the momentum trend, which is something that I follow very closely because I could trade, all day long as a professional trader, and I like to trade for cash flow and trends. So right here, when we broke this is when IBD put us in corrective mode. So for me, that means I'm going to try and be net short most of the times, buy very oversold dips and try and stick with the leaders. And as of now, we've come down about 45 handles from the high into a prior support that we outlined. Remember this breakout level? This was what? This was about 1378. This is when we moved higher in late February. Right now we're retesting that zone. We're right in front of the 50-day on the S&P, which is 1371. So we're a bit oversold here. So traders who didn't get short on the breakdown, last week or so and want to just get involved now, they were a little frustrated yesterday because if you press to the shorts to the downside with the McClellan oscillator down -71, they probably got squeezed out. Same way if you were trying to buy a dip for a big move besides a cute little cash flow move instead of just in the leaders, you had to take your trade. So it's a very choppy type of trade right now where you don't have to be all in, you don't have to be so active. At this point, I would be in wait and see mode unless you're professionals like us that can maneuver almost surgically.
Well, let's dive into some of those leaders because, as you mentioned, strong stocks remain strong throughout the correction that we've seen. Let's take Apple. It's our go-to stock. It's perhaps like the name that you associate with being the leader. So what's your game plan with Apple right now?
I went into Apple flat over the weekend. I said, you know what, I don't want to have the risk of Apple. Even though if we have a good jobs number, it could be up $10. It's a bit extended. And if you did take it into the weekend, at least it gave you a way out. It opened down $8, went flat, and then went up about $5 through Thursday's high. So for me, I was flat. I did a cute, cash flow trade. I took $3, $4 out, and that was fine. If you look at the chart of Apple, you will see it so far has not been affected by this correction. Okay, it opened up lower. Remember, I drew this line yesterday. I said if Apple can't trade below, just say the 623 area, you're not going to see Qs get pressured. And you know what? It held it, went positive, and pushed. So it was a great trade yesterday. If you were long it over the weekend, you were there. If you're a macro investor, you've been rewarded for holding it. I do think it goes higher, but if this rally or this correction starts to add some speed, and as it gets a little bit further along, they do sometimes come after these leaders. So if you're not involved in Apple and you want to get involved, I would not initiate into new highs. I'd wait for a pullback or extended from the 10 and 20-day moving average. I would use those areas in order to hold it. And if you're watching it for market composure, if it starts to show some relative weakness, which it hasn't, then maybe we'll get some more speed to the downside.
Now, how does that compare to your strategy with a stock like Google, which also acted well yesterday, continues to show strength? Where's the current support level for Google?
Google is not like the runaway train that Apple is. Google's been consolidating ever since that report last quarter that wasn't great. If you look at the chart here on Google, it's been a much more methodical type of trade, so to speak. If you were a macro investor and you held during this earnings report, you really had to get involved a little bit more around the 200-day versus support. And then as a trader, you had your little trade into the gap, and then fast forward, it started acting better. Saw some resistance by the prior highs, and then it pulled back, and this was the area that I said to some guys, you know what, 625 could be a level to buy, decent area for a cash flow. Yesterday it acted well, it was down 5, wound up going up 3, so nice for a trading vehicle, and also it's acting well for an investor. But at this point, you have to, another gut check. Are you a macro investor, and are you going to hold through earnings that come out on Thursday? If you are, you have to have a risk tolerance. For me, I'm not going to be long the stock into earnings. I might take an option play, which you can tune in on Thursday, and I'll try and do options because at least I know my risk is premium paid. But I also still say, as a macro investor, if you held the last quarter, you have to hold this quarter. And I do think the highs of the year are not in. I think there's a bright future out there for Google. So stay the course if you have that kind of risk tolerance.
What about the Google of China? We actually saw Baidu push through Thursday's high. So what would be your game plan with Baidu?
Baidu also was a stock on my go-to list yesterday. I said, you know what, there's about 4 or 5 stocks that if anything can go green, they can go green, and Baidu is one of them. So if you weren't involved in Baidu, you had a nice cash flow trade going to the winner, going to your tool belt, saying, you know what, strong stock, acting well, it can go positive, and went from negative to positive and made you some money. And if you're a macro investor in there, you have to be happy as well. Look at the chart of Baidu. Last time we had a very nice calculated trade on it that we talked about was when it traded through this 140. That was the downtrend. That's when I said, this is a spot to put on the trade. It went as high as 155 into resistance, pulled back, but what did it do? It held higher. That's what you want to see. Demand come in, held the moving averages yesterday. It actually went positive, had enough strength to push through this little pivot, but not a lot of strength. So at this point, I still think it's acting well. Stay with it as a trader, and as an investor with risk tolerance, it's acting well. It's not giving you any faulty signs yet.
One of the best stocks we can use as an example of ones that were bucking the trend yesterday was Las Vegas Sands, going from negative to positive. I'm wondering if you're using the tier system for this one.
100%. And this just shows you how you could book some cash flow. You could stay with a macro trade. LVS was something that I actually decided I could stay with even in a market correction because I like the way it acts. I can handle it. I know the way I trade because I could use a tier system in and out. And it also was down $1 yesterday. You could have added on weakness. And then once it went positive, you could add it through the pivot. And then you could have even bought it through the previous highs. If you look at the chart of LVS, a lot of different trades here, even if you didn't take it home long. So it was holding the moving averages, tightening up here, closed well on Thursday, so it was worth a take home. Opened down, held the 20-day. You could have bought it down. If you didn't think that you had the risk for that, you could have waited till it showed a lot of relative strength and traded through this area of about 58.84. And if you missed that, you could have bought it more since through the high, and it closed well. And if you go to the monthly chart of this stock, you will see that the next real big resistance doesn't come up until this zone. Obviously, there'll be some movement to the downside along the way. But I think if you're a macro investor, stay the course in LVS. I like the chart on the daily, monthly, weekly, and then you could use tier systems to actually book trades and hold trades. So there's cash flow there, and there's also an investment quality there.
Now, does the same strategy apply to a stock like MasterCard that also went from negative to positive yesterday?
Yeah, MasterCard has been showing relative strength. It broke out. It didn't go down last week when the market went in corrective mode. So if you were an investor, you had to be happy with that type of action. You look yesterday, I think it was down $5 at some particular point. And then look what MasterCard did. It also went green. If you want to look real quickly on the 3-minute chart just to see, there you go. If you weren't involved in MasterCard, you wanted to make some cash flow, it went sideways. This is the first time I woke up, consolidated again, in the morning trade. You could have bought it versus the low here, and then you had a nice cash flow trade of $4 or so. Then it went positive and pushed. You can't ask for better action out of the leaders here. So for now, it's continuing higher. Visa also looks good in that group. So in a correction, I would say stay only tier 1 overnight, but you could add those cash flow tiers intraday if you know how, to make some extra money.
Well, of course, we're watching the leaders, but we're also watching financial stocks. They're on our radar as they're getting ready to report earnings. We're going to dive into this sector right after this.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
All right, we're diving into the financial sector. Lots of banks are getting ready to report earnings soon. Scott, let's first take a look at the XLF because we just took a look at the market leaders. Now let's take a look at the other side of the coin.
Well, this is important because this has been a market leader, but it showed you some signs it was getting weaker. And thank goodness they did, because that gave us some signs to get rid of some of our macro positions. You know, we've been trying to hold 10 to 15 positions since December. So as the banks started to give up their 10-day and 20-day, started sending out notes, you know what, it might be time for some corrective type of action even before we had that last distribution day. So if you look here at the chart of the XLF, you will see it's kind of in no man's land right now. Like, this was that last upper channel, if you remember. Then we drew this line saying if it stays in the bottom end of this overall channel, it could spell weakness as long as it stays below these two moving averages that start to curl. And yesterday we broke below. Okay, now the question is, do we retest? You know, this is what we probably could do. If you trade versus slow, you retest this broken trend line. If they can't get back above it, then we potentially could go down to the 50-day, which is right around here. Sometimes the market's too weak and we don't retest. Okay, but you know, you could expect it considering we just went from about 16 down to here, so no reason why it can't get a little bit of an oversold bounce and then continue. So right now, you know, the banks have gotten a little bit weaker, and I think you have to keep your eyes on it because psychologically, you always need to know what they're doing for the tone of the overall market.
Well, one of the bellwethers of the financial sector is, of course, JP Morgan. The company reports earnings on Friday. I know you picked at this stock a little bit yesterday. I thought it was a little bit oversold. Tell me, what was your strategy leading into that, and now what your strategy is leading up to earnings?
I had the same type of strategy on Thursday with it. You know, in corrective type of modes or corrective type action, you don't need to go with the second, third, fourth tier stocks, especially within a group. So for the financials, JP Morgan has been best in breed, so why not look to that to see if it could bounce first? I know Wells Fargo is doing all right too, we'll get into that. But if you look at JP Morgan, let me show you, okay? Here is when it broke this little upper area. It couldn't get through this 46. I remember sending out a note when it went below the 10-day, and even though obviously it's not unhealthy for it to go below it, that gave me a sign that, you know what, for the first time, JP Morgan gave up the 10-day, because look what it did this entire time. It followed the 10-day. As an active trader, you want to see something change, and it changed on this day, not drastically, but a little bit that I could notice. And then since then, you've had a nice move lower. So I said, you know, I'm going to take tier 1 anyway, and I'm going to be a buyer into this support, which is about 42.90 to 43.10. And then if you go to the 3-minute chart, let me show you the quick move that you could have done as far as using the tier system. So here you go. This is what I did yesterday. It opened down. I bought around 43.10 because that was part of my plan. And then look at the opening print. It went sideways, right? Went sideways during the day, showed some relative strength. Here's where you could have added for cash flow, right around the morning high of 43.50. And then now you're in tier 2, or you're in more than you had overnight. You ride it as long as you want. You could have sold it along the way. I think I sold mine around here, went back to tier 1 overnight. And now today, I'll figure out what the action is. If we could hold yesterday's low, I think I stay with it. And then if we could break this small little, you know, area here, or yesterday's high of, what is this high here, of 44.28, perhaps it gets a bit of a move. But if the bears have any control, they're not going to let it reclaim, I would say, this 44.75 area. And I do think that's actually, I'm being a little, what's the word here? Overzealous by thinking it can get there, you know, so we'll measure the action. But again, you don't need to be in all of them. You could play the best in breed for oversold bounces, but trade a level versus a level.
All right, well, speaking of maybe being overzealous, I want to ask you about Wells Fargo, also reporting earnings, of course, on Friday. And of course, many also expect the company to beat, but some say, or some speculate, that expectations might be too high for Wells Fargo. So do you agree with that?
Expectations are very high, and it's been acting very strong, so they better be good. This is one that's always like considered the golden child. I know everyone loves Jamie Dimon, but people love Wells Fargo because Warren Buffett, you know, went involved with this one way back when, and so it has that halo effect or the Buffett effect. But anyway, you look here at the chart, just like the rest of them, it broke this upper area. Okay, it obviously closed off the lows. So I would say, you know, what's this number here, about 3402? You know, we could see a retest of this area before earnings, okay, which it tried to do yesterday, but the bears have any control here too. They're not going to let it get back into this zone. And I do think at some particular point, you're going to be able to, as a macro investor, buy Wells Fargo around the 50-day, and that's around 31.94. You know, I personally am not going to take either one of these two banks into earnings. Hopefully they have a nice little rally beforehand so I can get out of the way and then figure out the action after the report and trade it then.
All right, and earnings are still a week away for Goldman Sachs. This one hasn't been acting as well. What's your game plan with Goldman when it comes to this stock, because it's likely to be more volatile than the others?
For this one, it's just been a trade. It has to have the perfect price pattern. Even with the perfect price pattern, Goldman Sachs has beaten me up a little bit this year. Rightly so, because I probably beat them up. Anyway, you look here at the chart, when it broke, you had a nice little rising channel here. When it started to break below 125, that was a signal that the banks were going to come in. And it definitely came in a lot further. It's already below the 50-day. It's below, obviously, the 10 and 20. So to me, this is a weaker bank. It's just a trading vehicle. I know guys tried to trade it yesterday to go negative to positive for cash flow. Wasn't very powerful. I guess it could continue to this 120 area, or maybe even into these moving averages, which is around 123. That's big resistance. And then if today the banks get hit a little bit below yesterday's low, watch this big area support. And to me, that is right around 113. At 113, if it gets there quickly, maybe I'll look for a bounce, but otherwise I'm just going to avoid this one.
All right, and Citigroup reporting earnings next week. Many analysts have said that it could rise by beating estimates, but this is a stock that many people have called the new Bank of America. We saw it gap down yesterday. So at what levels would it be worth buying?
I want to show you the charts real quickly. Citigroup, I don't really trade because I trade the others, but take a quick look here to show you relative strength or relative weakness. Citigroup, okay? Below the 50-day. It came in really hard. Look where that is. That means it's below the 50-day, whereas JP Morgan is well above the 50-day, so it's stronger. Stay with that one. Wells Fargo, well above the 50-day. So why be in a Citigroup that is acting weaker and has a lot more potential problems out there? I'm avoiding Citigroup.
And now what about Bank of America? A lot of people do the Citigroup versus Bank of America kind of comparison. Bank of America, of course, passed all of its stress tests, has risen about 66% this year compared to Citigroup's 33%.
Bank of America has been one of my vehicles this year, and it actually trades a pattern. So I like it because you can't be in all of them. If you look at too many things, you're not going to trade any of them well. For me, Bank of America was a great trade from January, and then if you look at the chart pattern here of Bank of America again, this was the last time I really focused on it. Look at this move from $8.15 to $10. You got to like that, and you could have taken as much size as you wanted. Then all of a sudden it started consolidating again. I remember drawing this halfway mark here, saying if it stays below the halfway mark, it could get weaker and get pressured. I talked about 880, and guys are tweeting me like, why didn't you buy it at 880? You said you would be buying it there. I just lost sight of it yesterday, and I apologize. I can't buy everything. From here, you could trade long versus 880, but the same kind of concept. Let's see how the bounce goes. It could bounce up to 940, but here you can have a lot of resistance. And if it can't even bounce and breaks yesterday's low, this is where I'll really be interested, right around the 50-day, around 852. I think this would be a good spot to buy back if you sold into the strength. And if you dabbled yesterday, hopefully it was just tier one, if anything.
All right, well, let's do some quick hits, Scott. Let's take Research in Motion. We did see it getting a little beaten up last week, but it did pop yesterday on the news of the AOL patent sale to Microsoft, with people speculating that maybe Research in Motion could do something similar. So does the patent play breathe new life into this stock, or is it still headed lower?
I think it's still heading lower, but if you are an uncommitted short, you got scared. A lot of people think AOL was left for dead, so by them selling the patents and it being up $6, I think anyone in RIM short go, ooh, that could happen here. I mean, I better just cover if they don't really think it's going below 10. So I think the fast short money got out of the way, and then it also, if you look at the chart here, it didn't close in the highs. If people were really that running in, so running in real quick, it would have went above 1360 or 14. It's still down there. I think you avoid RIM. Below $10, maybe I'll get interested to start accumulating for what could be a takeover, maybe at 13, 14 or something like that.
All right, and oil has been trading on slower growth as opposed to inverse with the dollar. So does this pattern continue?
Yeah, I think oil and the oil service stocks, the OAH, actually, they've been the laggards. I'd love to see oil go a lot lower. I think it'll be great for the economy. Unfortunately, the forces of will aren't letting that happen. But for now, it's below all the moving averages. You look at the USO, it's below the 10, the 20, the 50. At this particular point, it did rally a little bit off its lows. So if you were trading it long, trade long versus this 38, 36, but if it breaks this level, the next big support comes all the way down below 37. Below, right around here, maybe I get interested. Right now, I'm not trading oil because there's not much opportunity there.
All right, and VMware out with earnings next Wednesday, April 18th, has been looking strong. What are you thinking about it now?
This has been one of the chosen ones. The whole cloud group has been great, and I apologize for not covering it enough. I've been more in Apple land, Baidu, Google. But if you look here, this has been something great ever since that 102 pivot. I talked about this pivot on the show, and this is an example of me being an offensive coordinator versus the player on the field, because I did not trade it here, but I listed it on the price point sheet, and since then, it's had an unbelievable move. And now it looks like it's setting up again. Look at this relative strength here, above the 10-day, above the 20-day, not even near the 50, whereas you saw so many other things come into the 50. So this is showing you relative strength. It's showing you that institutions are still there. But again, going into earnings season, you need to know your risk tolerance. If you're a macro investor, I would only be in tier 1 going into the report. If you've been holding it for a year or two, it's still showing all the right signals. Stay with it. I think there's a big future ahead for this one. And also, Salesforce.com has been acting a bit better as well.
All right, and quick strategy for Zynga and Yelp.
Zynga I got stopped out of. It was acting heavy after the deal. You remember that day of the deal? I bought it around $12.40 because it held at 12. Deal price went to 13, and since then it broke. Yesterday, it had a little bit of a red dog reversal. Nothing so extreme, but at least it gives me a buyable pattern, because I do think I like the future with Zynga. So here, the pattern's very sloppy. Here is that excitement that came in, that shooting star top that closed in the lows, a sell signal after a move from 12 to as high as 16. And since then, it tried to stay in the channel. It's been working lower. And then finally yesterday, it traded below the 1176, and once it came back above it and closed green, I said it's worth a try. I'm going to put my stop at the low of the day here, 1125. I'm not that big. And then, if it could get above this area, perhaps I add for a cute cash flow trade, and that is 12 and a quarter, but it's going to have so much resistance here at 1295. It's going to need some type of huge volume catalyst to get this back in technically good shape. For right now, I'm very small in Zynga. Also, not Zynga, I'm sorry. Yelp acted better, pulled in. It also reversal types day. Like, look at how you have to trade these things. This was a great trade when it triggered above this downtrend. You could have added above the IPO high, but you have to be very careful here because there's not a lot of people involved. So from 26 to 32 was a big move. Now it came back, retested. So here, I didn't go with this one, but this one looks decent for a swing entry. You could have bought it when it back above this 2402 with a stop at the low of the day, and then at some particular point, if it trades, it's going to probably need some more time, but it trades through 26, you could see it bounce again. So it is a new issue. It's very, very thin. Know what you're getting involved in. But these new issues have been trading relatively well, and they're worth getting to know. So when they have more time underneath their belt and they start acting really well, you'll be acclimated with them early and be able to have bigger size than if someone was just introduced to it, down the road. And
lastly, I just want to ask you about Netflix, a stock that we love to talk about. What type of range do you see it trading in going forward?
This is why you have to know technicals, because Netflix has been a long, a short, a no trade. And recently, the last move we had in Netflix was from 111 to 123. I'm sure you all remember it because it happened quick. We had it as a buy area, and guys made a lot of money. And then everyone's like, where could I buy the dip? What level would be constructive? And I said, you know what? If we go from 111 to 123, if it's going to continue higher, it probably holds around 116, 117. If you look at Netflix, it never did. No support came in. They said, I don't care. They said, I didn't miss anything. So here was your last buy, your last little buy area. Went to 123 into prior resistance, and then it's been dribbling lower, and a no trade. So it's coming into old support here. If you are shorted, maybe you cover into it here. If it shows some type of reversal pattern, you could try it. But as of now, it's a no trade until we get a little bit closer to earnings.
All right, well, speaking of earnings season officially kicks off today after the close with Alcoa. So what is your strategy heading into trading today?
My strategy is I'm going to try and play some of the strong stocks for a bounce. I don't know how much energy will be behind the bounce. If the market can't get going, maybe we trade through yesterday's low. If we trade through yesterday's low in the spiders, I want to show that real quickly. I'm not going to get too far into it. If we go below 137.84, I'm short the spiders as a hedge. Maybe I'll add for a quick trade, but I do think that the 50-day, which is now at 137.29, I think you cover there, and look to see how we handle the 50-day. The first time we get there, it typically is buyable. I know it wasn't buyable in the diamonds yesterday, but the spiders we'll see. So at this point, I want to trade versus yesterday's lows. If we start taking them out, I'll get out of the way, and then I'll see what area holds.
All right, thanks so much, Scott. Happy trading, everyone. Have a great day.